All right, Kyle, I think we are live.
All right. Our very first live stream.
Yeah, our very first live stream. We're totally pumped, totally psyched. We'll see how this goes. If you see how many people join and if there are questions. But today, Kyle and I, well, there's a 15-second delay, so maybe we give it 2 seconds here. But might as well get the disclosures out of the way.
Sure.
So, and we got our first person watching us. So there's actually somebody out there. If you can hear us and you're on the live stream, can you just put something in the comments so we know we're tracking the right direction here? And I'm gonna share the. All right, this is our disclosures. Okay. Basically, this says that everything that we're doing is strictly for educational purposes only. We haven't taken your accounts or any of your situation into account to give advice. This is not advice, it's just education. And no client professional agreement has been entered into. And can you think of anything else that we have to say just so people know that we're not giving them specific advice on their situation?
I think ditto what you said, and then I usually just add that none of this is official tax advice, and wouldn't take this into consideration without reaching out to a professional first.
Awesome. So let's talk about quarterly tax payments. What are estimated quarterly tax payments? Well, let's start with that.
Sure. So your taxes are actually due quarterly. Every taxpayer is a quarterly taxpayer. They just don't know it most of the time. And
right.
That's because most of the time through salaries or wages, you have tax withholding every pay period. So those numbers that come out your paycheck every 2 weeks or every month, those are your quarterly estimated tax payments. And usually for a majority of taxpayers, those are sufficient for avoiding penalties and interest. Not always. And just because it's through a W-2 doesn't mean you're not going to owe quarterly estimated tax payments. But most people are kind of caught by surprise when they owe these big tax payments quarterly without incurring any penalties or interests for late payment.
Yeah. So I think when I think about quarterly taxes, this is income that's received outside of like a normal W-2 paycheck, right? Where your employer is withholding your taxes as well. So this could be if you have substantial investment income, you may have to pay quarterly taxes. You may have significant pensions or retirement accounts that pay a steady stream of income that may have no withholdings, which then cause you to pay quarterly taxes. Another one is if you've inherited a large income or an asset, you may not be paying quarterly taxes. Now all of a sudden you have to pay quarterly taxes, right? Sometimes when I see this, I also consider like if you're receiving alimony, right? Because that's taxable income that it doesn't come on a paycheck where stuff is withheld from it. You're going to have to pay quarterly taxes. So I think these are the main people. Or I guess if you're a business owner and you're like an S corp and you're having special distributions, you could probably have a quarterly tax bill being due.
Yeah, so self-employed people, and then like you said, anybody with kind of an extraordinary event, whether that's a stock sale or selling some real estate or something with an appreciated gain associated with it. Yeah. The taxes would be due that following quarter.
Yeah, and so that's a great lead into when are these quarterly taxes due? So you said the following quarter. So let's kind of give some dates and how that works.
Sure. So if you want to share my screen there, Amar.
I'm adding it right now. Boom.
So this is directly from the IRS website. And these are the quarterly estimated tax payment due dates. And so April 15th would be Q1, June 15th is Q2, not July 15th. September 15th is Q3, and then what is usually January 15th would be Q4. And the way these calculations work is, April 15th will be for income from January 1st through March 31st. Any income in May or April and May would be due June 15th. June, July, August, September 15th, October, September, November, December. I think I missed a month in there.
Yeah.
Are due January 15th, the following quarter.
So like the one that's due in June is really just 2 months, right? That's what it's covering. I think that's something important to realize. So let me ask you a question there, Kyle. Like if I'm thinking, all right, I'm going to need to pay quarterly taxes, can I take my total amount and divide it by 4 and just pay equally each quarter?
That can work for some income, not all. If it's a capital gain or a large capital gain, technically it would be due that following 15th after the end of that quarter. Some income, like anything that comes through on a 1099-R, which would be a retirement distribution, or anything earned on a W-2, can be considered earned evenly throughout the year if you don't indicate otherwise.
Okay.
And those you can kind of string out throughout the year.
Cool. So I'm changing this back to both you and I, and then I guess if you have a large payment that's due in a quarter, or even if you're paying, you divided your total liability divided by 4 because you have steady stream of income. How are you actually paying? Is this a check, or are you paying online? Is it different for different states? How does that work?
Yeah, so it's a great question. I would say at this point, most of my clients pay online. So you can just go on the IRS Direct Pay website and make payment that way, as long as you just verify your prior year information and enter in the right quarter. It's fairly simple. And I would say most states, I know California does, that they also have online payment portals as well.
Yeah.
And it just depends. Some of them are not up to speed and don't have the online payments, and you have to write set in a voucher and a check, which works too. And so the way that works, it's the Postmark Rule. So as long as it's postmarked by April 15th for Q1, June 15th for Q2, that schedule that we just went over, as long as it's postmarked by that date, you are considered paying on time. It doesn't need to be deposited, received, and cashed by that due date.
And that's good to know, because we work with a lot of individuals that are in retirement, and they're used to writing out on a paycheck or on a checkbook and balancing their checking account that way. A lot of these portals online, they're fairly easy to use, and you can attach your bank account directly to pay that estimated payment. So the convenience factor should be definitely weighted in on this. What happens if you forget to pay? I mean, I think for a lot of people, they have a lot of stuff going on, especially your average business owner, and they may forget to pay exactly on the 15th. And so I'm assuming there's some penalty and something like that they'll have to deal with.
Yeah, and so there's a penalty for underpayment of estimated taxes, and those are assessed pretty much immediately after those due dates, right? So if you missed April 15th and let's say you pay April 27th, well, then you'll have 12 days of late payment penalties and interest. If you want to share my screen, I can kind of make a point on kind of the amounts that we're looking at. So this is the IRS interest rate penalty. So when we say interest and penalties, this is the estimated tax payment underpayment penalty. So this is an APR rate. So, it comes out at like 3% per year. And so if it's for 3/4 of the year, typically it will be, 1.75% or 2%, something to that effect.
We're talking very small dollars, because even though the interest rate relatively to everything else may be high, right? Because savings accounts are paying close to 0. You're talking about 10 days, 12 days of that interest, which is, maybe under $50.
Yeah, so as you can see on the schedule, that was kind of another point I wanted to make, is that, interest rates are at historic lows right now. We're at 3%. And as you can see on the schedule, it's never gone below 3%, this millennium. And it used to be as high as 5, 6, 7, 8, 9%. And so there was a much stiffer penalty for delaying your tax payments and paying at the end of the year rather than on a quarterly basis. So at 3%, a lot of clients are going, well, I'd be better off paying my mortgage, or I'd be better off paying some other debt instead of the debt to the IRS. And I think that can make perfect sense in some cases. And so when I started my career, down here, or I guess down here, a lot more clients were really more apt to paying those on a quarterly basis. And I see more and more foregoing the estimated tax payment penalties and just paying, just eating the 2-3% interest rate and paying in April. And then, in this environment, I'm more on board with that philosophy than I had been in the past.
Yeah, it's kind of difficult. I think also everybody's situation is different, right? Like if you're in a bind financially, then it's harder to. Then you're picking, between two. Then you would obviously go with the lower interest rate. Is there anything else that we should be covering around quarterly taxes? I mean, do you base it off of last year's income? Do you base it off of this year's income? I think that's one thing that we haven't gone over yet.
Yeah, so that's a great point, and a good segue into what's called the safe harbor provision for federal taxes. And so you can pay based on 90% of your current year tax or 110% of your prior year tax. And so where that comes into play is, let's say you have a big, huge gain in 2021, and maybe you had a lower income year in 2020 without any big gain associated with it. You can make your quarterly estimated tax payments based on your 2020 taxes.
110% of that.
110%. So let's say you made 100,000 in 2020, and this year you're going to have 500,000. Well, you basically just have to pay in what the tax would be on $110,000 rather than the 500,000, and you avoid all penalties and interest associated with that. Most states have a safe harbor provision as well, a similar safe harbor provision. One caveat I know probably that you've come across with clients in California is that once you get above $1 million in income, you're no longer allowed that safe harbor provision.
Yeah.
And so each state's different. Most of them allow it, some don't. So it's always good to check on that. Let's say you sold a rental property in Oklahoma or Alabama or some state that I typically don't work in that often. I'd have to check if you can do safe harbor or not, but most of them do allow it.
So every state is different, right? So, and the other thing I've noticed is that these quarterly payments can be made electronically, but if the state owes you money, they'll always send it via check in some cases. So it's kind of funny how that technology is just one way. But
yeah, the IRS is not the most up-to-date, technologically sound 2021 era organization. I think they just got email last year in some specific cases. Most of it's fax still. So, fun fact.
Yeah. So we went over the due dates. We went over why you could potentially have quarterly or estimated quarterly payments. If anybody has any questions, you can put it in the comments right now. I see there are a few people listening to us. And otherwise, if you have thoughts or questions, please put it in the comments after this recording, and we'll look at them and try to give some input into future videos.
That sounds good.
Yeah.
Yeah, this was just a big ploy so we don't have to edit the video too. So.
Yeah, I mean, if you guys like these live streams better, and if it's easier on us too, so there's no editing, and it's maybe if we do this on a reoccurring basis at the same time, then people know to join. Kyle, that could be something that we could probably try to work on, right?
Absolutely. So yeah, we'll be doing this more often, and appreciate everybody here now, and Now we're going off into the internet ether forever. So
There you go.
Find us later.
All right. Thank you, Kyle.
All righty. Talk to you later. Bye-bye.
Yep.